Halloween's coming and real estate in the Fraser Valley is looking a little scary. Jordan here with your Fraser Valley real estate market update for October 2024. Sales are down again, inventory is up again, the feds are throwing everything at the wall to kickstart their image, and bond yields are jumping, which doesn't bode well for fixed rate drops, but variable rates will likely drop another quarter point, so that's a silver lining, right? Despite 3 consecutive rate cuts, active inventory have hit levels not seen in 10 years, and sales are 30% below the 10-year average. Fraser Valley Real Estate is building towards a buyer's market if sales continue to lag. The Fraser Valley Real Estate Board recorded 982 sales in September, down by 8% over August, and by more than 10% over September of 2023. Again, seasonally adjusted sales were the second lowest in a decade in the Fraser Valley. New listings rose in September, up 21% to 3,352, an increase of 17% year over year. This is what I expected to happen, and you'll recall last month that I had mentioned a lot of sellers were waiting for the fall season to either list or to reset and reposition their active listings that weren't selling. We saw a spike in failed listings as a result. Failed listings are any that come off the market without selling, sometimes expiring, but more often than not terminated as they either adjust the listing, usually the price, and then put it back on the market. Overall inventory increased 5% from August to September to 9,045 units. That's up 39% over last year. While some of those listings found success, by and large, the sales ratios continue to trend down, and the combination of declining sales and rising inventories has helped to create a balanced and in many cases buyer's market conditions in the Fraser Valley. Detached homes are having the most trouble at the moment, with basically every area deep in buyer's market territory. For instance, White Rock and Surrey Central detached markets saw an only 5% sell-through rate in September. So if you're trying to sell detached in those areas, you really have to stand out. Attached homes are faring better overall, largely due to them being more affordable. If you'd like more in-depth information, check out the market area page at jkre.ca, and I'm always happy to dig into it with you as well to try and determine where you stand in a particular area, whether you're looking to buy or sell. More information means better decisions. Across the Fraser Valley in September, the average number of days to sell a single-family detached home was 35, while for a condo it was 37. Townhomes took on average 30 days to sell. Benchmark prices in the Fraser Valley dipped again in September, with the composite benchmark price down 1.4% to $978,800. This is the largest month-over-month drop we've seen in quite some time. Taking a look at benchmark price activity by category, single-family detached fell to $1,501,100. That's down 1.5% compared to August of 2024 and down 1.3% compared to September of 2023. Townhomes fell to $834,400, down 1.4% compared to August of 2024 and down 1.6% compared to September of last year. And lastly, apartments fell to $545,000. That's down 0.2% compared to August of 2024. Oddly enough, it's actually an increase of 0.4% compared to September of last year. There were a few markets that saw minor increases in benchmark pricing: Maple Ridge townhomes and condos, White Rock condos, Surrey Central condos, New West condos. You see a trend emerging? But for the most part, HPI was down across the board. Affordability continues to be the driving factor in sales, and the high rates, coupled with high prices and high inflation, make for a difficult combo. And while it's improving, it's going to be an issue for a while longer. I still believe we'll reach an inflection point sometime in the next 6 months or so, but when you're sitting on the market trying to sell, that can feel like a lifetime. It doesn't look like there will be much relief of fixed rates in the short term either, as 5-year bond yields has spiked recently. It's not due to any positive economic activity on the Canadian side of the border, so my guess is that it's following the US yield curve as it spikes on better than expected job numbers. We are expecting another quarter-point rate drop at the next variable rate announcement scheduled for October 23rd, but variable rates are still quite a bit higher than the lowest fixed product currently offered, so fixed are still the go-to option for most. That being said, I think there's likely an opportunity to make long-term plays as prices fall in the short term, knowing that we'll have a ways to go on rate drops overall, and once they get low enough, prices will climb. The question is when and how much, but investors, at least the most aggressive, progressive ones, already seem to be sniffing around the edges. I participated in a pre-sale event in Abbotsford last week that sold out its first phase in about 24 hours. Largely, according to the reps there, it was investment activity. Reach out if you want to be kept in the loop about pre-sale opportunities in your area. In other news, and for anyone not following the political rat race, the federal government is trying desperately to kickstart sales and get any kind of a win they can, as they're currently polling in fourth position. There were 3 major announcements made in the last couple of weeks that go into effect in December. The most recent was the removal of the stress test on renewals. I'm pretty ambivalent to this one. If someone was already paying their mortgage for 5 years or so, they shouldn't need to jump through all those hoops in order to keep their home. The other two, though, I'm not a big fan of. Namely, the increase of CMHC insurable mortgage limits from $1 million to $1.5 million, and the new ability for first-time buyers and those buying new construction to opt for a 30-year amortization rather than 25 years. Basically, it's allowing Canadians to spend more and take on more debt while benefiting banks and tax collectors without solving the core issue that led us here in the first place. Despite promises to build 4 million new homes, recent reports highlight that housing starts were down by 30,000 units last year due to high rates, so we're not moving in the right direction. I get into it more in depth in an article that I'll link below. But that's just my opinion. I'd love to hear yours. Do you think the bottom of the market is nearing, or are we a ways away yet? Do you think the first-time buyer amortization and CMHC changes are a boon or a bane for Canadian consumers? Let me know your thoughts. And as always, if you have any questions, all things Fraser Valley real estate, whether that's buying, selling, or investing, give me a call.